Finance Minister Nirmala Sitharaman will present the Union Budget on 23rd of July, just 2 weeks from now. It's a highly anticipated first budget of the Modi government since it was re-elected for a record third term earlier this year. The Union Budget 2024 is expected to reform the income tax structure and make savings instrument more lucrative for the Indian middle class. Here's all you can expect from the budget. The government might streamline tax slabs and reduce tax rates to provide relief to individual taxpayers. Now, currently, the tax rates in the new regime range from 5 to 30% depending on the income levels. Now, the government is considering measures to reduce personal income tax rates and raise the income threshold for tax liability from 3 lakh rupees to 5 lakh rupees. This means that any income below 5 lakh rupees per annum or nearly 41,000 rupees per month will be tax-free. Now, the changes aim to increase disposable income, particularly among lower income groups. Remember, the government also introduced new tax regime back in 2020 in the Union Budget with lower tax slabs but without traditional deductions. But adoption has remained an issue. Reports now indicate that a revision of tax rates in the new tax regime will be announced in the upcoming budget, and that could mean good news for those opting for the new tax regime. The government may look to increase the standard deduction threshold for taxpayers in the new regime to broaden its appeal. The budget may consider increasing standard deduction to 1 lakh rupees from the current 50,000 rupees. Now, another crucial proposal includes a potential hike in ATC deduction ceiling from 1,50,000 rupees to 2 lakh rupees in the old tax regime. ATC, remember, of the Income Tax Act 1961 encompasses deductions for a wide range of savings and investments including LIC, PPF, RPF contribution and more, and the annual limit today at this point is 1,50,000 rupees. Now, given ATC limit hasn't really changed in the past decade, despite rising cost of living, it warrants an enhancement in the limit to help the salaried class save for their future. Finally, the government is also looking to increase the tax deductible amount on savings account interest to 25,000 rupees. Now, the current limit under Section 80TT A is 10,000 and 50,000 for senior citizens for the old tax regime. Now, banks have been advocating for incentives on deposits due to rising concerns over the increased credit deposit ratio, and the budget may finally address that concern. Hopes and expectations are riding high on the upcoming budget to make some historic changes and provide that much needed relief to the Indian middle class.